you.
There you go.
All right, thank you. So first of all, I just want to say good evening and thank you for allowing us the opportunity to come in here and speak to you. My name is Hugo Flores. I'm with the California Department of Insurance. My partner in the back is Iswa Nakasato. We're here on behalf of our insurance commissioner, Ricardo Lara. What I'm going to do today is I'm going to speak briefly about our department, what we do, how we can help you. It's sad that a lot of people don't know that our department exists, even though we've been around since 1868. We are the largest, we regulate the largest insurance market in the United States, and California is actually the fourth largest in the entire world. We have over 13,000 employees. We oversee, over 13,000 companies, and we recover approximately about $84 million every year back to consumers. So what we do, in a nutshell, is we regulate the insurance companies that do business here in California. They got to come through us to get their license. The insurance, the agents, the brokers, the bail bonds. And certain lines of property, our insurance commissioner does have the authority to review any type of rate increases that the insurance companies submit. And we also investigate consumer complaints. We regulate over 21 lines of insurance, from auto to workers' comp. But today we're here to talk about wildfire. The fires have it caused tremendous damage even after they stopped burning. People still are feeling the effects, and our department does side with that. We understand that there are issues as far as finding insurance and or keeping the insurance as well. But what I'm going to talk about first is about your basic homeowners policy. If you have any questions as well, we can deal with that as well. We don't have to hold them until the end. That way, we don't forget or your question doesn't get missed. But your homeowners insurance, what you want to absolutely try and make sure is that you have the adequate amount for your home, for the cost that it's gonna, for the amount that it's gonna cost to replace the home, which is different than the purchase price or the actual cash value of the home, because your homeowner's insurance generally doesn't, cover the land. So we're only looking at replacement of the home. So you want to make sure that if either yourself or the insurance company hasn't made an adjustment and it's been a couple of years, you really want to look at that, because if we don't and the amount is low and, God forbid there's another disaster or you make a claim, you don't want to find out then that you were underinsured. You've been paying, a monthly premium. We want to make sure that the amount is enough to get you replaced. So in order for us to understand that better, we're going to look at the actual policy. So there's, on your standard homeowner policy, you're going to have from coverage A all the way to coverage E. And A is going to be your dwelling, so your house. That's the main, that's going to be your biggest amount. And in retrospect, when we purchase a home, that's probably going to be our biggest asset, our biggest protection that we have. Hopefully we leave it to our kids, or, at least that's the idea for some of us. So that's going to be the biggest chunk of it. Then we go to part B, which is it's going to be the structures that aren't attached to the home, like your garages for some of you. I don't know if you've seen that commercial about insurance where the lady's telling the person because her shed burned down, she calls it a she shed. So that would be under part B. Then part C is going to be your personal property. Your jewelry, your pretty much everything that is, that you've accumulated over, over the years. And before I forget, we are passing around a home inventory guide. This is a great tool for you to be able to list all your property, hopefully before you have to make a claim, because we accumulate so much property, at least I do. My wife calls me a hoarder because I don't like to throw anything away. But, it is going to take some work. I'm not going to lie to you. But once you have it done, in the very back of that brochure, there's like a little envelope that's built into it. So once you're caught up with that, anything you purchase from that point forward, put the receipt in there. That way we have it. Now, some people like to, get their phones or like a video and store it up in the cloud. That's great as long as, we can get to it. However, we're still going to have to tell the insurance company the make, the model, the condition of the property. So the video, you might go too fast, might get a make, might not. So I would recommend, if you have the time, to do both. That way you for sure have one. And when it comes down to, hopefully you never have to make a claim. You know what they say about insurance, right? We all have to have it for certain things, and we hope to God we don't have to use it, because that means something went wrong, we made a claim, or our premiums are going to go up. All depending, right? So so continuing with that, another big issue sometimes that we get after a disaster is when it comes to either the loss of use or the additional living expense. This comes in even if there's only like smoke damage, and they tell you that you can't go back to your home yet. So these are things that you need to really look and speak to your agent, or you can read your policy. You can ask a family member, or if it's Monday through Friday from 8 to 5, you can call us, and we have some experts on the line that will answer your call. They can answer general questions unless you have your policy with you. Then if you can read it, that we can tell you that. Or if it's something that we can't do, something over the phone, because we may need to look a little further, or contact the insurance company for you to get the original document, we can do that as well. All you have to do is fill out one of our forms that we can mail to you, and it's all free, and that way we can double check it for you. So if you have any questions, please don't hesitate to call us. And then the other, two other coverages that are pretty standard, under your homeowners are going to be the personal liability against you. For example, like if your dog bites somebody, or you're having a party, you serve alcohol, that person leaves, drunk drives and crashes, and they find out that you gave them that, and they make a liability claim against you, that would be part of your homeowners as well. So you have those. Now, that's what it pretty much covers. The typical exclusions, meaning it does not cover, are going to be earthquake, flood, any type of earth movement. Those are all generally excluded. Mold and wear and tear. So if we let our property go, we can't, and then the roof goes because we didn't change it and we didn't maintain it, and we can't expect the insurance company to come in and pay the full amount. So those are just things that are generally going to be excluded, meaning no coverage from your policies. So you want to ask yourself, well, how much should I set my policy for? Because I don't want to be overinsured and be paying more, and I don't want to be underinsured and find out that I thought they were going to replace my home, but now my home's not here and I can't afford it. So what, the things that we can do to try and make sure that we are not going to be underinsured are to talk to our agents. Don't let 3-4 years go by and the amount hasn't changed. If we know that the property materials that it's going to cost to replace our home is gone up, or if you made an upgrade, say to your restroom or your kitchen, get your agent involved, because that's going to change the price to replace that. And if we're still paying the same premium for the same amount, that's what the insurance company is going to have to pay out on a total loss. So if that needs to be increased, it's better to do it before, obviously, the claim. But, these are things that we forget about. My partner, Sally, who was supposed to be here, she likes to say in her presentations that people spend more time when they go to Target or Walmart to buy a TV than when they purchase their insurance. And, the insurance, like I said, this is probably going to be your biggest asset is your home. Some in Southern California is a car, but for most of us, it's going to be our homes. So another thing, too, that we sometimes tend to forget, or maybe the agent, he didn't explain it, or he went too fast maybe, or is that, generally speaking, your personal property is going to be 50% of what the dwelling amount is. That means, your jewelry stuff, but there's a limit within a limit. So, for example, if you have jewelry or if you have firearms, those are going to max out at a certain amount. So if you don't have 50% of whatever your dwelling is in property, and I have way less stuff than that, then we need to look at that because you're paying for 50%. So if we don't have to do that, then we can make adjustments. Same way you can go up. If you have a lot of jewelry, fancy stuff that's going to go over that limit, even if you have a total loss, and even if you didn't reach the 50% on the other things, but once you reach the max on your jewelry or your firearms or anything like that, that's the most that the insurance company is going to pay. So if you have more than that, we can raise that as well. You can you contact your agent or contact the insurance company directly if you already have your policy, and they're either going to call it an endorsement, a rider, a waiver. It just depends on the policy and the company. But those are things that that can be done, so you can make sure that when you do get paid for these, you're going to get paid for what you had, and you're not overpaying or you're not underpaying. That's where we want to try and get you, because the insurance, you're not going to get rich off it, but in theory, it's designed to put you back in the same condition you were prior to the claim or prior to the disaster, not better, not worse. So those are certain things that we can do. Now, when you're looking at the home too, and we're going to replace it, what we noticed also in the wildfires were some of the people that were uninsured, not all of them, but some of them, they didn't have the building code upgrades, and their home was older. The fire came through. Now the insurance company is going to rebuild. Well, now you have to put it up to code, not from, say, if it was built in the 50s, say your home was, now we're going to build it as it's been now. So we have to go with those codes. So that's another coverage that you can add to your homeowner's policy, and it is more than likely cheaper to pay every month than it is to at one shot after the disaster happened. There's also things to think about. There's going to be inflation costs if years have passed by and we haven't made any changes. And if it's a big wildfire like we saw in Paradise, the demand surge is going to be higher, meaning the contractors are going to charge more. The materials are going to be more because there's a higher demand. So all that is going to cost higher to replace your home. And again, the insurance company is only going to go with the limit that was set at the time when the loss happened. What happened, or what we've been seeing now in some of these rural areas, or after a disaster happens, is that the insurance companies are either raising the rates, the premiums, at a really high level that's outpricing the people that have lived there for years, or they're non-renewing. They're saying once your policy expires and once we're not obligated to renew you, then we're going to go ahead and we're not going to sell in this because the risk is too high for us. So then it becomes an issue of availability as well, or a high rate increase. So if just a couple of keynotes here, if they are going to say that we're not going to renew you, they have to, by law, send you a notice 45 days in advance prior to your renewal date, and it has to have wording specifically as to why they're going to non-renew you. And that is so that you have 45 days to either fix what they're telling you, that this is why we can't insure you, or so you can look for another insurance company. We would like to recommend not to wait if you get that letter. You can also call us and we can review it for you, but you know, if you do get that notice, or you know somebody that gets that notice, tell them not to ignore it, because after those 45 days, if the insurance company did that right, then, you know, that is within the insurance code that they can do that. Some of the people they're not being able to find any coverage because the insurance company, they're, you know, leaving that area altogether. So what can they do to try and find insurance, right? Well, they can call our department. We have the top 10 tips that we put on our website that we can tell you over the phone if you don't have access to the internet. You can talk to your neighbors, whoever they have. If they're still in the area, they might be able to take new business. It all depends. And just so we understand how this works, some of these areas had basically very few agents that were selling the majority of the properties. So the majority of the properties were probably with a small group of companies. Okay, so when they pull out of the area, and you go back to that agent and say, hey, I need you to find me somebody else. If those are if that agent only has 2 or 3 companies that they're appointed with, they may not be able to put you with anybody else. But you can call an agent out of the area, and he or she may have a company that doesn't have any business up there that is willing to take that risk. The price may be different, but at least we're combating. Now it's available. Now it's a question of, can I afford it? So, you know, these are issues we're seeing. Our insurance commissioner, Ricardo Lara, is really being proactive. He's meeting with the county officials. There are conversations in place. So we're listening to the folks that are having the issues, and then the officials, they're looking at what type of legislation can be made to protect, them plus any future. Hopefully, we don't have these disasters, but we need to be prepared so that we're not being reactive, but we're being proactive. Some of the changes are, before the insurance companies would look at risk a little bit differently. They would calculate it a little differently than they do now. And the way they look at each town or each city, they're learning from these fires as well. For example, if your home is fortified, and if there's one way in, one way out, you kind of thing, is one road all the way up to the top, it doesn't take very much for a tree or something to fall and block the access to the fire department. At that point, by the time they clear it, your house is probably going to be burned at that point. And they're looking at all of this, just like it happened in Paradise. And they're insurance is a for-profit business, and so they're looking at that as well. And what's magnifying this as well is that the fires really started back in like 2015, and then 17 and so forth, Santa Rosa all the way up to now. And so some of these companies are taking some huge losses, and there's got to be like a middle point, and that's why our department is taking the lead to meet with the officials, talk to the people. We're collecting all the data. What insurance companies are non-renewing, who's leaving, who's staying, so that we can come to a middle ground and come up with a plan so that the folks can, not have to be afraid of will they be able to afford insurance, or even worse, will I even be able to get insurance? So along those lines, if that were to happen to any one of us or any of your friends or anything like that, there are different things that we can do. The standard market, which is the common market, like your Farmers, your State Farms, your Allstates. These are companies that are licensed through us, and they're admitted. If they pull out, there is another market. It's called the surplus line insurers, and they may be able to put you with coverage there as well. It's a little different. The price would be a little different, but you can also call us, or you can go on our website if you have access to the internet. It's at www.insurance.ca.gov, and we have a list there of all of the approved surplus line insurers. And if you absolutely can't find anything, and you're paying a mortgage, and you still have to find something, there is the California Fair Plan that you can go to. They've made some changes, recently, the last few years. They've gotten a little more coverage, but it's not going to be the same type of coverage because some of the coverages they still don't offer. However, if you do get a fair plan, then you can get another like a wraparound policy. It's called difference in conditions, and it basically will cover everything else that the fair plan's not going to cover. So I think I'm running out of time. So does anybody have any questions or? Okay.
I was wondering, do you have a list of insurance companies that are providing fire insurance in California now, so that someone who has had their fire insurance canceled, that you have a list of insurers that they can go to see if they can get insurance through them?
We do list the insurance companies on our website that are doing business here in California. We have, we put them up there, by ratio, by size, and we have their contact information as well. And we can also give you the number to the surplus line insurers if there's nothing you can locate there, or the California Fair Plan as well.
What percentage of your policy is your living allowance while you're out of your house?
I'm sorry, what percentage?
What percentage of your insurance policy are you allowed for living expenses when you are out of your house because it's being put back together again?
Well, there's going to be limits within there, and there's limits, with a day, and there's limits maximum as well. So you would have, not every homeowner's is like a cookie cutter, because remember I said you can raise it or you can lower it. So your standard, though, is going to be what that it would cost to either rent that property or you pay for that property. But you are entitled to submit for hotel receipts, anything that you couldn't do because of the loss of use from your house. So again, we need to look at our lifestyles as well, and then if it's a rental property, we can do the loss of use as well. So they're not all the same. So you would need to speak to an agent to see what works better for you, because the higher you go, it's going to pay more premium as well. So it's what you're comfortable with. At the same token, if something happens, you want to make sure that you're comfortable that way as well.
I have a question on earthquake insurance.
Sure.
My daughter has a CSA policy, and in the disclaimer it says, if we are unable to cover these losses, you're out of luck. What happens if they can't cover all the losses? Suppose a whole batch of people have CSA insurance and they can't cover the losses. What happens?
Now, it says that on their declarations page, or on their
disclaimer? Yes, in the declaration.
Or like on the actual policy?
Yeah, page I think 6.
Okay. Well, with earthquake, if you have a homeowner's policy, that company every 2 years is required to offer it to you. You can also go to the California Earthquake Authority, which is where the majority of the policies are going to be purchased through. So the California Earthquake Authority at that point becomes kind of like the bank that's going to pay the claims out. That was done after the Northridge earthquake to make sure that people weren't going to be, without any funds if, say the big one happened that, they keep telling us it's going to come. So there are security parameters in place, like the California Earthquake Authority, that was done by legislation to make sure that the folks, that the insurance companies don't just run off and say we're going to go bankrupt, we can't pay for all this, we're out. So they're like the overseers of that. So what I would ask is if they went through the California Earthquake Authority when they purchased that policy, and we can also, if you wanted us to see that, we can review that language to see if it's been approved, if it's been appropriate, if they filed it, so we can review it. So we can do that, again, by either calling our hotline, and we'll mail you a form, or online if you have access to the internet. You don't even have to print it. You can do it all through there and submit it, and it'll give you a case number at the end. When you see that, that's confirmation that we did receive it. No later than 10 business days, one of our officers will get in contact with you. They'll provide their personal information, and any other questions or issues you have, you would deal directly with that person from that point on. I have not personally seen that. Yeah, but we can certainly take a look at that for you if you allow us to.
What's the maximum length of time as of this January that it can take to have your house rebuilt?
As of this January, you mean after a declared? So after it's been declared a disaster by the governor, it's going to be 2 years from the time that, and 1 year if you're adjacent to it. So again, and actually, I'm glad you brought that up because there was, not the last one, but one of the more previous legislations that passed. It was actually done by our insurance commissioner before he was insurance commissioner, where he added more protection if you weren't a total loss, but you were adjacent to the folks that were, because a lot of times you can't go back into your home anyway if you're in that general area, because it's not safe to do so. They're cleaning, the debris removal. So there are protections. Like I said, we are hearing what the issues are, and we're trying to put more protections. Sadly, it's going to take some legislation to happen, but if the disaster's already occurred. So if better protections can come out of that because our leaders are working together, then at least we can see that as a positive, and moving forward, hopefully we're more protected as a whole. Any other questions? Yes, ma'am.
The insurance, California authority that offers that.
The Earthquake Authority?
Yes. The
Yeah, okay.
Earthquake Authority. I guess this is on. I keep seeing ads that they are offering that, and that on TV, and that they are lowering the price to actually purchase that. And we have had insurance, earthquake insurance on two homes, and I don't see anything going down. It keeps going up. And so I'm just wondering, are they trying to stimulate or get these people interested in buying more so that they can spread the wealth? I don't know what's happening there, but we don't see any decrease. It goes up.
Okay. Yeah. There's a lot of things that could happen in with decreases, but you basically, I don't know if they were referring to actual decreases when you say they were lowering the price, or the changes that were made a few years ago when they lowered the deductibles. Now, because some people will say, my premium dropped, but they won't tell you that I raised my deductible, though. But yeah, that's why it dropped. So we have to look at, your policy or your neighbor's policy, whoever we're looking at, that policy, to see if the rates, if the increases or the lack of decrease, if that's being accurately done by the insurance company or not. And we can certainly do that for you, but sometimes people will say, this lowered. Like I know they just lowered well, not just, but they have lowered the deductibles now, where before it was really high and people didn't feel comfortable with that, understandably so. And so they lowered that. They made some changes for the better. It's still, it's referred to as, the insurer of last resort. So keep that in mind. But for some folks, that works. Depending on what area you're in, that'll work. And again, just keep in mind with the deductible, the higher it goes, your premium goes lower, and vice versa. But we would, if it's a certain issue where you think, hey, my neighbor got it, and they have the same company I do, how come I didn't get it? We can look at your policy for you. All we need is your authorization, like I said, on a form. We either mail it to you or you can go online, and we'll certainly take a look at that for you. You're welcome. Anybody else? Yes, sir? It's coming back here.
The earthquake is a good example. We do not have earthquakes throughout the state of California or the nation like we have wildfires. So we had $54,000 worth of damage in the earthquake covered by insurance before they tightened everything up. And what we've had to pay since on the two homes, they've gotten the $54,000 back already, still counting, still the same rate. The rates aren't going down. There aren't any earthquakes. There aren't any claims. Why wouldn't the earthquake pot, if you will, fill up to a certain amount and start closing it off and tapering down the rates until you have to pay something out? The purpose of that is to have a reserve to pass out for earthquakes, and we're not going to have an earthquake over the entire state. We might have it in the north, we might have it in Tehachapi, we may have it in the south. And this is this huge pot that's growing larger and larger, and we don't get any report on it. How do we find out how many millions or billions are in that pot right now?
Well, like I said, that's actually a task of the California Earthquake Authority. They're their own, department. They're their own, Now, so how we come into play is once you do have a policy, then that's through an insurance company that we regulate. So that's how we come in. But as far as who administers that program, who runs that program, that would be the California Earthquake Authority. They have their own leadership, their own folks. But you can certainly give them a call. If you don't have their phone number, we would be more than happy to give it to you by calling our hotline, by going on our website. We have it up there as well. But yeah, that's a great question. And because it is a rate issue, though, we can certainly take a look at it for you. Your specific policy. Your neighbor can call us too, and their cousin and whoever, and we can definitely take a look at all those policies for you, because now it's by an insurance company that we do regulate. So
Quick question.
Yes.
Do you have this in electronic format on your website?
We have it in a brochure type where you can see it that way, but we are working on doing that. In fact, I spoke to the person who was working on it, so give us some time, and we can certainly hopefully make that happen for you, because we do see the need, the ease of it, going forward with that. So we're working on it. Is the best answer I can give you, but yeah. All right, thank you, folks. Thank you, sir.